Good morning, traders, and welcome to the weekend update. Steve Gans here, and we're going to get into charting in just a moment. Before we do, I want to take a look at open positions or positions that were closed this last week. The first one was this FedEx position. So this position was closed out for $326. So I will be moving that from our open positions down into the closed trade archives. So that's going to be happening here in just a little bit. So obviously down in closed trade archives, there are hundreds of trades that those of you that are members can go and review whenever you want. That being said, let's switch on to our current open trades. For the most part, things are looking pretty good until we get to this one, and we'll discuss that in a moment. So this rut trade expires this weekend, this upcoming Friday, and this trade had been doing really well, and then that massive uptrend happened, or the massive gap up happened, and there wasn't a lot that could be done on this at that point because it is so close to expiration, and this trade gave back a significant amount in that up move. Now, I had people ask me, why is it that I thin trades out as I go? This was precisely the reason. Had I been able to get a fill on the additional thin that I had out there, this trade would be at about a $1,500 or $1,800 gain instead. But that order did not fill before that gap up. It was an order that came close to filling but didn't fill. But the prior order to that did fill, at least a couple of them, kept this from being a massive loss. So having thinned that along the way definitely saved this trade from going from a nice winner to a loser. But again, didn't get the fill that I would have liked to have had before the CPI number last week, which would have improved this much, much more than where it currently is. But this trade is at a no-lose trade at this point. I'm looking for maybe just some decay throughout the week in this general area. See if this can't get back up to maybe a 10% profit range or so by midweek. And if so, I'll either roll wings up, lock in some profit. Oh, check this out. I've got a little visitor that just showed up here. I don't know if you can see this or not, but a little blue jay just showed up on the table beside me. Oh, there he just took off. So he drops in from time to time. He's a California scrub jay, and we've named him Scrubby. And when I set out here in the mornings, he comes and has coffee with me, and I give him a peanut. Anyhow, that's the nature trip for today. So but then we've got the double calendar. One of these was also thinned out not too long ago, and that leaves us in this position. And I think we're going to get some more decay here on Monday or Tuesday, possibly staying about where we are, maybe a little pullback. So I'm looking to get this to about 10% profitability, and that will have been in under 2 weeks time frame if we can get that to happen. That's what I'm looking to have happen there. This particular trade, again, I'm thinking that our upside move may be stalling. I'll show you why in a moment. There's Scrubby back again. Say hi, Scrubby. Anyhow, so I think our movement to the upside may be stalling a little bit here. Again, I'll show why in a moment. And this trade is going to be setting here just fine. I may make some sort of adjustment on this if we do move a little bit higher. If we don't move a little bit higher, I'll probably leave this where it is. Then I'll come down here real quickly to Fortinet Solutions, and I will be looking at rolling this wheel trade out a month. So look for that to happen here this week because this short put does expire later this week. Then we get into this guy, this Rut Butterfly. I and many other traders on Wall Street, per the article I shared in this circle, were thinking that the CPI number was going to be largely benign and that we were just going to have a little bit of chopping back and forth in the rut, and obviously we had an explosive up move. Now, fortunately, this trade does not expire for quite some time yet. There's almost 70 days left in this trade. That does give us good adjustment ability or a good time frame in which to adjust this. But I'm going to take a look at what's happening in the markets, and we're going to see, how aggressive I want to be in that adjustment phase. So with that said, let's go take a look at our charts. So I'm going to deal with the rut first here, just because the rut trade is our problem child right now. Now this is a weekly chart of the rut. And the reason I went to a weekly is I want to point out, if we come all the way back here, now this is all the way back, in 12/20 of 22. So the rut had been higher here before, but it fell back, and the rut had some resistance to falling when it kept getting down here around this 2160 range. It'd get down here, it would bounce, get down there, bounce, get down here, bounce, bounce. Finally broke through with force. Then it tried to rally back up, couldn't get through. Rally, rally, rally. But look at where that rally stalled, right here at 2162, right where this previous support had been. Hello again, Scrubby. Right where this previous support had been. So while the rut is certainly strengthening, I just am looking at the fact that this may stall here a little bit at this point, giving us some time to adjust this, giving some time for this particular trade to decay. We are still positive theta in that trade, so that can decay a little bit more. So I'm going to be a little bit careful as to how quickly I go about adjusting this. So that's the rut. And if we turn this to a weekly, to a daily, just to give you again some perspective on this move, we were at 2036, then we gapped up to 2180 or 2080, and then ran all the way up to almost 2136. The following day, we dramatically exceeded that. So that is a 130-point move in 3 days in the rut. That is a massive move. That's about a 5% move in a very short amount of time. Again, right now we see on Friday Russell gapped up big and then started selling back off later in the day. My expectation is that at least it might come back down to this 2120 range or so, maybe even a little bit lower. Ideally, I'd love to see this gap fill. If this gap fills, then I think we're really off to some higher numbers. But it could take a little while for that gap to fill. But even a 50% retracement of this move would work very favorably for that open trade. So that's what I want to see, is whether or not I'm going to get a retracement back inside this zone. A little Blue Jay fight going on over there now. Anyhow, so let's look at the SPX. And if we look at SPX, something that I want to note specifically is the size of the move. So if I come down here, I look at the bottom of this move to our top, note that it is 396 points. If we look in that square that's over to the left there, 396 points in 33 days. Big move. So let's do the same here and look at this move. Let me dial that in. So 421 in 40 days. So a very similar sized move. These are generally referred to as waves. So we had a big wave up, call it roughly 400 points, a little bit of pullback, and then another 400-point run. And again, right up to the top of this channel. As I mentioned last week, I was expecting that we might run up to the top of this channel, then have a little bit of a pullback. I would expect a pullback might bring us down, maybe not to the total bottom of the channel, but closer or further down this channel. Let me turn on the sun here a minute so I can see my screen. So I would expect possibly a little bit more pullback happening in this, maybe down into the 55 range or so. Again, barring any unexpected news, etc. We are entering earnings season, and of course that always tosses a level of uncertainty, if you will, into the markets as to how some major companies might report. But overall, it tends to still keep us trading in a range. It takes a number of very bad earnings reports from very large companies to throw us out of a trend channel like this. So that's what I'll be watching here for the next coming week. And I think that's pretty much it for the weekend update here for July 14th. Take care, everyone. And those of you that are in the community, I will see you there next week reviewing our trades, possibly opening a new trade. So we'll take a look at that. I might even toss an earnings trade in. I don't want to get too crazy on those because they do require some pretty good focus and the ability to be at your computer the day after the earnings announcement. So again, this isn't a day trading service, if you will, or a day trading community, but occasionally if I find a good earnings trade, I do like to go ahead and make that, share with people how I make those. I do tend to do them mainly as calendars or diagonals. There's very specific reasons for that. Those of you that have taken the calendars and diagonals course understand that. But if I do want to run through the shortened version, if you will, of why I do them the way I do them in the community. So if you're interested in the community and knowing more, look for a link down below. Otherwise, we'll see everyone later. Take care.